What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we have a juicy video for you guys. We are going to be speaking all about AT&T, and then I'm even going to throw in a little bit of Nikola at the end. I put up a poll yesterday asking you guys what stocks you wanted me to cover a little bit more in depth, and Nikola just barely beat AT&T. But I feel like I have a lot more to say about AT&T right now. I mean, AT&T is a company I'm actually invested in, that I am a bull on, but has so much going on in the background that a lot of people don't fully understand. A lot of people look at their max stock chart and just see, a really bad couple of years followed by a good year followed by another big crash, and it doesn't look very good right off the bat. So I want to try, show you guys why this could be happening. A lot of people look at AT&T stock chart and they'll be like, ooh, I have no interest in that. Look at 2016 to 2018. That was terrible. I don't know what's going on behind the scenes. I'm staying far away. My goal today is to kind of let you know what is going on behind the scenes so that you can actually make an opinion on whether or not you believe in these guys in the long term. So the main two things I want to speak about in regards to AT&T, okay, is their acquisition of Warner Bros, which is now known as Warner Media, and their acquisition of DirecTV back in 2016. And then in regards to Nikola, okay, I'm going to briefly touch off them at the end of the video. I'm just going to let you know my opinion on whether or not I personally believe that you should buy, sell, or hold these guys. So stay tuned for that. And right before we get into the video, can I ask you to please smash a like? It helps me out absolutely massively. I appreciate it so much. And these videos where I only speak about one or two stocks don't usually do that well. So please, if you're one of the real ones, help me out. Drop me a comment down below. Let me know your thoughts on AT&T or on Nikola, whichever it is. And please make sure to subscribe if you're new around here. We are getting very close to 7,000 subs. And ultimately, we're on the road to 10,000 by next month. So I would appreciate that so much. And lastly, guys, I actually did my first ever collaboration on YouTube only yesterday with my boy Matthew, so go check that video out if you want after this one. I will leave his link in the description. It came out really good. It was just chill. We just sat back, we had a chat about airlines, about hearts, about Nikola. It was a pretty cool video. And of course, give my boy the sub as well. He's probably hitting 10k by tomorrow, man. This guy is blowing up. So with all of that out of the way, guys, let's get straight into it. Of course, we're going to start off with AT&T. So let's start very simply, okay? We're going to have a look at AT&T and their dividend, okay? So a dividend yield of pretty much 6.4%, a dividend safety of 65, which is safe, it's better than the average company, and we have an uninterrupted dividend streak of 36 plus years. So these guys are a dividend aristocrat, and they're a very popular dividend aristocrat with a market cap of 232.42 billion. The earnings payout ratio is in a good place, and it has been for the last 5 years, and even going into the next 12 months, given everything that's going on in the world, and given the fact that we've had a couple of rough acquisitions that we're going to get into, this is a very nice sign to see. And again, free cash flow payout is also in quite a nice place. EPS has been going up and up. Now it's expected to be a little bit lower for the next 12 months, but I think we can forgive them for that. Operating margin is at 16%. Free cash flow margin is at 19%. Net debt to EBITDA is just at 3.3 going into 3.15. So again, quite good for the company. And net debt to capital is only at 0.5. So off the bat, it looks quite good. So in regards to AT&T, I'm really focused on their recent history today. That's what we're going to be speaking about an awful lot. So if we go back to the 1st of July 2016, more or less their absolute peak, okay? We're going to go from there. I'm going to see that it was a solid 2.5 years of downwards growth, literally until the very end of 2018. It was nothing but downwards movement, and they went down about 35% in the span of 2 years, which is obviously very poor. Now 2019 begins, okay, and we see some really nice movement to the upside. I mean, in the space of a year, we see 37+%, which is nothing to sneeze at. We go down to our smaller time frame, and we can see pretty much right when the crash began to happen, these guys dropped down about 30%, so not as bad as a lot of other companies. And right now they're still down 15%, so they didn't drop as bad, but they haven't recovered as well. Now we have to speak about what happened here. What happened in 2016 all the way through till the very end of 2018? Why was this period of time so poor for these guys? I want to start things off with DirecTV. And I have to be honest, I actually never even heard of these guys until I started looking into AT&T. And what DirecTV is a satellite service launched on June 17, 1994 that transmits digital satellite television and audio to households in the US, Latin America, and the Caribbean. So satellite TV. AT&T acquired DirecTV on July 24, 2015 in a transaction valued at 67.1 billion. And let's just say that DirecTV has not performed very well. The start of 2017, they had 21 million subscribers, okay? 26 if combined with Viewverse, we'll touch on this a little bit later, and revenue of 12 billion. The end of 2019, DirecTV subs had fallen to 16 million subscribers, so over a 25% loss. So why did AT&T do this? Okay, It was aimed at increasing AT&T's market share in the pay TV sector. Now we are going to come back to DirecTV a little bit later, but in order to understand the full picture we have to have a look at Warner Media, previously Warner Bros. And Warner Media is split into a few different segments. So first of all we can have a look at Warner Media Entertainment. It's responsible for HBO, Cinemax, TBS, TNT, True TV and digital media company Other Media. HBO is one that a lot of people will speak about and we will speak about later on. Warner Media News and Sport. So this is CNN, CNN International, CNN on Espanol, CNN Airport Network, loads of sports sites including the MLB Network and NBA TV, so a lot of very well-known brands. So between DirecTV and Warner Media, it's quite clear that AT&T were trying to, get a large proportion of the market in regards to television. And on June 14, 2018, AT&T announced that it had closed the acquisition deal on Time Warner. So a big part of what AT&T are trying to do now is they're trying to sell all of their products as one essentially. They're trying to bundle together DirecTV and HBO Max. The way I see it is they're absolutely doing everything in their power to keep DirecTV alive, because right now things are looking very poor and who knows, one day they may just have to completely let go of DirecTV because they have been nothing but a burden since acquiring them. But get DirecTV and enjoy a year of HBO Max included. So before HBO Max was around, there was HBO Go and HBO Now, and HBO Max is a platform offered by Warner Media that features 10,000 hours of premium content bundling all of HBO together with even more movies, shows and originals. So it's essentially another Netflix or another Disney Plus, but it's fair to say this has not picked up the same amount of momentum as either of those companies have. So we're having a quick look at HBO Max versus the Disney Plus buzz alongside the Netflix, which isn't really a buzz anymore but just alongside Netflix search. The above graph shows the relative search interest of Disney Plus versus Netflix along with HBO Max, HBO and HBO Go. So all these little lines at the bottom are all the different HBOs, and we can see that as of right now every one of them is actually above Disney Plus. Now there was no initial absolutely mental interest that we did see with the likes of Disney, but as of right now there is actually more people searching up these things than they are searching Disney Plus. Disney Plus hit almost 30 million subscribers post launch in 3 months. Okay, adjusting for relative interest levels, that would put HBO Max's potential at roughly 8 to 10 million new subscribers in the next 3 months. But what's important to keep in mind in regards to Disney Plus as well is a lot of people sign up for free trials and will never give Disney any money whatsoever. And that's just the way it is. I'm invested in Disney as well. I would love for all of those people to stay on, but that's not realistic. And something worth looking at is that HBO Max's forecast is for 50 million subs by 2025, which is up from the 35 million subs currently on all other HBO services, which means it only needs roughly 3 million new subs per year. So if this interest that's being shown in HBO Max does have some sort of correlation to how Disney performed after launch, it's going to be absolutely fantastic and they're going to be well ahead of their projections. Now, there may not be a correlation, but it is something I wanted to bring up. It's something I personally found very interesting, because if this is to be true, if we can see 8 to 10 million more customers on HBO Max within 3 months, they are so ahead of schedule. Now, again, that may never happen, but the good thing is, it doesn't need to happen for it to still be a success. Another great article from Seeking Alpha. AT&T is one of the most underrated aristocrats in town. They have lost touch with the rally of the broader stock market price since March or April. They haven't rallied as hard as the market has in whole. The fears concerning AT&T financial stability were partly justified, but that should no longer be the case. And this is due to the likes of, HBO actually coming up in the world now. Above all, they do not justify such a discount to the broader market, and I completely believe in this, and that is why I have been buying them relatively heavily when I've not known where else to put my money, and they're currently extremely undervalued and offer a lot of value to investors. Things were going well before the virus hit, okay? The company generated a cash flow of $29 billion in 2019 instead of the planned $26 billion. That is massive. That's a very big increase. And even in the weak first quarter of 2020, the company generated a free cash flow of $4 billion. The PE ratio is currently at 16.55, so somewhere around fair valuation. I still currently believe that they are undervalued. Again, PE ratios aren't everything. If you see a company that has a PE ratio of 10, it does not guarantee that if you buy them you will make money. I do think they are at a very good price personally. I mean, my personal cost basis for them is at $33.35, so I am still down ever so slightly. And I just think that these guys, very similarly to Altria, have so much upside potential, and we have to remember they pay that massive dividend. I mean, we're looking at a country, okay, who last year gave over, I'll have to go back a little bit further, okay, from their lows to their highs, gave us over 38% in a year, and they have a massive, where are we, 6.38% dividend yield. I say it on the channel quite a lot, but generally, if people find a company that they believe in that has a 3.5 to 4% dividend yield, you're happy seeing 10 to 15% per year. So we're looking at a company that has a 6+% dividend yield, who I personally believe has the potential to give back considerably more than 10 to 15% per year, especially in the short term. And I also think the long-term fundamentals are fantastic. These particular acquisitions in DirecTV and Warner Media may not have gone so well, but it shows, guys, it shows that AT&T is always trying to expand. They're always trying to get a bigger share of the market. They're always chasing more customers, more money. Now, I'm very excited to find these guys' Q2 report, okay? But as of right now, we can see that they have cash nearly 10 billion, okay? Current assets, we have 52.7 billion. Total assets, 545 billion. That is massive, okay? Current liabilities, 69.7 billion, and total liabilities, nearly 350 billion. So short term, not the best in the whole wide world. It's fine. They're going to be absolutely fine. In the long term, their assets to liability ratios are absolutely fantastic. These guys are a dividend aristocrat who has been hit very heavily, who pays a very nice dividend, who has lots of upside potential. It makes sense for me to buy at any kind of a discount I can get in at. I think what's happened with DirecTV is done. You know, they'll keep using them, they'll keep getting whatever money they can from them, but I don't see this as being a big growth catalyst. Warner Media though, guys, I think that these guys could give them back an awful lot of money down the line. I mean, there's massive names. I mean, HBO and HBO Max, they have an awful lot of potential, as I just showed you. CNN, guys, CNN International, MLB Network, NBA TV, massive names, a lot of which aren't able to run at full capacity right now because of the situation we're in, but when it's over, it'll be right back where it was. This rally here, this 1 year rally gives me so much more confidence. If they were still downtrending before all the virus started to happen, it would have made my decision a little bit tougher, but that rally fills me with the world of confidence. So ultimately, I understand that there is much safer companies out there. I understand that, you know, they do carry their risks, but ultimately, a lot of companies that have a 6+% dividend yield will, I personally believe in them. I'm very happy to own them. So that is AT&T. Now, very quickly, we're going to touch off of Nikola. Oh, Nikola. Okay, what do you guys want me to tell you? I'll just come straight out and say it. I could not have any less interest in buying these guys right now. They make absolutely no sense to me. To me, it's laughable. It's gone beyond a spec stock. In a matter of a couple of days, they shot up over 150%. They're still up over 121%. It's absolutely nuts, people. I really can't comprehend it. I can understand people taking a risk down here. You know, before the merger happened, like, yeah, it's a spec stock, whatever, it is what it is. I can completely understand that. What I'm struggling to understand so much is the people who are deciding to buy up here, or even here, or here. I really don't get it at this price. They now have a market cap of nearly 30 billion. These guys don't have any revenue. They don't have any physical products. They don't even have gas stations for their vehicles. They have essentially nothing. They're trading at a light PE ratio of 1315. I don't even know how that's calculated considering they have no earnings. But anyway, to me right now, it is absolutely, completely and utterly beyond a joke what has happened to this stock. If you bought in down here, oh my days, I am so happy for you. Well done. You smashed it, you know, you took a gamble and it paid off. But if it was me, I would be running away with my money right now because I have no clue why something like this would happen. And I'm not a financial advisor, you don't have to sell, that's just my opinions. I've wanted to say this my whole adult life. Nikola is now worth more than Ford and FCA. Ugh. This is the CEO of the company, by the way. Actually, I don't even think he's the CEO anymore. A massive part of what made the price shoot up was a tweet, okay? We open up reservations for the most badass zero emission truck on June 29th. You can't even reserve them yet, they're just being opened on the 29th. I'll say that I have no interest in them. I'm not saying that I don't believe they can succeed in the future. They most certainly can. Of course they can. And I wish them all of the best. I mean, it would be crazy if Tesla got a proper competitor. It would be really good for the market as a whole and for the world going forward. So I do hope that they do very well. But from an investor's point of view, nothing about it makes sense to me. I would not feel comfortable putting my money into this company whatsoever. And it's for that reason that there is not a chance I will invest in them. But each to their own. If you're in them and you've made a lot of money, again, fair play. That is absolutely amazing. But that is where I stand both on AT&T and on Nikola. But as always, go out there, form your own thoughts, do your own research, and form your own opinions, you know. Don't come to me or anybody else on the internet for financial advice. I do hope that you were able to take some value from today's video, especially in regards to AT&T, because there is a lot going on behind the scenes that not enough people appreciate. And I know I always get a few people in the comment section wondering why I am willing to invest into AT&T, and it's because I love the look of their future prospects. I love what they do as a company. I love the fact that they don't settle, they always want more. And just because a company has a couple of shaky years does not mean that they're a bad investment by any means whatsoever. I currently think they're undervalued, they pay a very nice dividend. Win-win, baby. If you did enjoy the video, again, please do smash that like button. It really does help me out absolutely massively. The support is absolutely nuts on this channel as of late, and I genuinely appreciate every single one of you so much, and I'm so excited for everything that is to come in this channel's future. Things are only going to get better, I promise you that. I will have some exciting news for you soon. Subscribe if you're new around here. I hope you all have an absolutely fantastic day. I will catch you for tomorrow's video. Peace.